I walk, we got the sun. Three of them, one, I get back, you know. Hey everyone, happy Sunday! They walk alone. Wait, I love this song. Ooh, I walk with God the Father, walk with God the Son, walk with host of angels. I get back, you know. I know they walk alone. Every toba. Hey. How's everyone doing? Uh-oh. What is this one now? Hey, me on Facebook. Learning new stuff. Okay. It says I should reduce the frame. It will help. Okay, good. Hey everyone. Welcome on. Oh, I need to stop my music. Bah. Happy Sunday. I hope everyone is doing great. So much to talk about. As you can see, I'm already pumped up, already excited. You will not believe I have been on the go for hours. And here I am because I'm about to talk taxes. I am all pumped up already. So year end is usually one of those times where we can look back and right our wrongs, or we can take the time to really take advantage of those last minute strategies that we have not applied. And I love to talk about these strategies because a lot of us do not leverage what's out there for us because we don't know, right? Oh, hold on. Oh, I forgot. There's no, what did I do? All right, no. It was asking me to cross post, and I didn't even pay attention to that. So so that's the thing with the year end, right? A lot of times during year end, there are strategies that we could benefit from, but as business owners, if we are not informed, if we've not been well educated, there's a chance that we will not be able to leverage these strategies. And so one of the things I want to do, and I'm hoping that everyone who watches this video is going to get something out of here that will make them finish the year, you know, a lot better. If there's anything you've not been doing throughout the year that I'm going to go over, I hope that you can apply it, right? We still have at least, you know, almost 2 weeks. A lot can happen, a lot can be done. So I never minimize time, especially when it comes to doing things right. Okay, so I'm going to go ahead and jump right into my strategies because we have a ton. I said top 15, and when I was making my list, I'm like, whoa, it's too many, but I promise we're gonna keep this top 15, maybe 1 or 2 bonus tips. But I want to also, in the process of going over these things, I will be laying some foundational things because I think, you know, a lot of times if we just drop tips to people without giving some background information, without really laying out how it has to be applied, then people are just left with good information that means nothing, good information that cannot be applied, good information that cannot improve their businesses. Okay, so they keep giving me this stuff. What is this? Frame rate too low. I don't know what I'm supposed to do. They keep sending me this notification, guys. Frame rate. I am so sorry. What am I supposed to do with this? I have no idea. Okay, I'm gonna figure this out later. I don't want to waste anyone's time. So we're gonna start, okay? My very first strategy, and which is very interesting because someone would say, how is that supposed to be a strategy? I'll explain. My very first strategy, you guys, if you're a business owner, if you're an individual filer, is to review 2023. Isn't that weird? Like, review 2023. Yes. And why I say so is because a lot of us have gotten involved in different activities throughout the year that we never took the time to go back and look, you know, if there was any records that we needed to maintain. Okay, I'll give a good example. You would have people that would say, would maybe purchase a car and they wanted to write that off in 1 year, but they have not, you know, kept the documents in a safe place. So I want you to take the time and review 2023. What were some of the things that you were engaged in as a business person? What are some side gigs you may have done that may have made you some money? You know, sometimes when people have full-time jobs, they will do like things, you know, like things that they're passionate about. If they made money out of it, guess what? That becomes a business deduction that they can write, you know, a business where they can write off deductions and things like that. But if no one is reminding them of that, they will just let it slide. So I want you to take the time, kind of go through 2023, start reviewing, looking at what worked, what didn't work, but also what activities were you involved in. That's usually my first thing. It's crazy because we're talking about tax strategies and I'm talking about reviewing 2023. It's because it's important. Because if you do not know the things you've been involved in throughout, maybe even when it comes down to certain expenses you may have incurred, some people started businesses that they never pursued. If you do not sit back and write down all these things, tax season might come. Under pressure, you might miss out on all of this. So that's the first thing I want you to do. Second thing I want you to do, and I made a list here so I can follow myself because I get excited. The second thing I want you to do is clarify your 2024 goals. That's important. We're not talking about setting goals. I mean, we're going to do goal setting. I'm hoping we'll have one, but I'm talking about the goals that you want to accomplish financially. Okay. Now, a good example is someone who wants to buy a home, for example. When a person wants to buy a home, they keep thinking that if they write off all their expenses and incur all these losses, it's good for taxes, but they forget that it's going to impact them when it comes to buying a home. So I always say, before you go into the tax season, don't wait until tax season. Ask yourself, what are some of my money goals for next year? Because all of these play a role. The first one is, if you're planning to buy a home, for example, things like your mileage, your depreciation, especially those that will advise you to do like a bonus depreciation where you write off something in 1 year. You don't have to. You can spread it out. Second of all, there are people that may have made a lot of money and they are considering becoming an S corp for their business, which means you want to be an employee and an employer. Why this is important now is because instead of waiting till April 15 to file your taxes, you should be filing your taxes by March 15 so you can make an S corp election when you're submitting your taxes. You don't always have to do the election separate from your taxes. You can do it at once. So my second tip for you is clarify your money goals for 2024, because your tax return is one of the most used documents when it comes to things like buying a home, even making certain decisions. So you want to make sure that when you're filing your taxes, it's able to become this tool that you can leverage for the things that you want to accomplish. Even if it means becoming an S corp, you do it while you make the election, while you're filing your taxes. Okay. The third thing that I want to talk about, and guys, hear me, this is the biggest tax tip. Anybody can tell you, we can tell you about buying this, selling this, taking this deduction. Let me tell you, no tip beats having accurate financial records. Do you hear me? No matter what you do, have accurate financial records. If you've been running throughout the year where you kind of have just been winging it, what comes in, what goes out, you've not paid attention, I plead with you now, take this month of December when it's slow, go through your financial statements and organize your financial records. Having accurate financial records is the foundation to everything that we're going to be talking about. Whether it means writing off your home, paying your kids, whatever strategy we're going to talk about, all of these things start with knowing exactly what came in your business and what went out. If you already have a QuickBook, an accounting system or bookkeeping system like QuickBooks, that's awesome. If you feel overwhelmed, you can hire someone. Or if you don't have a lot of transactions, we have a free Excel spreadsheet that we give away. You can just shoot us an email. Just say Excel spreadsheet. We'll send it to you and you can use that Excel spreadsheet. Let me type the email address here. You can send an email to info@nps.com, nps.com, and we will send you that Excel spreadsheet. But hear me out, you guys. Of all my tax strategies, if you don't have accurate financial records, it's not worth it. I promise you, it's not worth it, because we'll give you strategies that do not fully represent your situation. Do you understand? So like sometimes I'll have people that are making losses in their businesses and they don't know, but they're trying to write off a car that they bought in that same year. Yes, it's a great strategy, but it's a strategy for someone who actually made a ton in profit. Or even when we talk about people that should consider renting their homes to their business, which we're going to be talking about that. All of these strategies are great, but if you do not have accurate financial records, it's not going to help you. So please invest in bookkeeping. If you don't have a bookkeeper, we'll be happy to bring you on board. But if you already have a good bookkeeper, this is a good time to make sure that you give them all your receipts, okay? Second thing, if you're good with Excel and you have QuickBooks, then take your time. You're good with QuickBooks. Take your time and reconcile all your expenses. If you don't, if you need us, if your expenses are not a lot and you can manage it yourself, I've put the email address info info@acnps.com. Send us an email. Just say Excel spreadsheet. The Excel spreadsheet is amazing. It has a tab for your expense, for your income, whether you were in service or you were doing sales. It also has all the different expenses that you probably incurred, so you can enter it month by month. Go through your bank statements, go through everything, put it down there. If it's not a lot, but at least have that done. It will save you a lot of headache. Okay, let me tell you, when it comes to bookkeeping, people that end up paying a lot in taxes is because they didn't have accurate records. People that end up getting audited, majority of the time, they didn't have accurate records. When you go to a tax preparer on the last day of taxes and you're giving them a box of receipts, who do you think is going to go through? But if you had done your bookkeeping start to finish, then when you go to them, you're taking only your profit and loss statement. If you use an Excel spreadsheet, you just send the Excel spreadsheet to them, and that's all they need, right? So please make sure your books are in order, because if you have accurate books, you have the best strategies implemented. Okay, that's my third tip, and let me be ticking this so I don't make a fuss here. Now, the fourth one that I have for you guys, which I think is really crucial, is that I need every business person to understand how businesses are taxed. Okay, so a lot of us, when we leave from working full-time and we set up our own businesses, there's usually that tendency to to always, because from an employee standpoint, expenses are not deducted. You usually get paid, right? Taxes are taken out at the employer level, and then you spend what is left, okay? Which means whatever is left is yours. When you go to file taxes, Uncle Sam is only concerned about the taxes that were taken out. If enough taxes were taken out, or more than enough, you get a refund. If enough was not taken out, you pay back, okay? Now, as an employee, you're very limited, okay? Because it goes like this. It goes from here, income, taxes, then you spend. Business world is completely different. That's why I love entrepreneurship. You guys see me being so passionate. It's because of the beauty of entrepreneurship. This is how you get taxed as an entrepreneur. You make money, you spend the money, and you only pay tax on what is left. You guys hear me? How exciting is that? It means for every expense that you incur to make this money, you're able to write it off. You don't pay taxes on your gross. You only pay taxes on your net. What does that mean now for you, a business person? It means you now have to start thinking of every activity that you're doing or any expense you're incurring to generate income as a business deduction. Because if we don't have this foundational information, I promise you guys, you're going to be leaving so much money on the table, okay? Now, so think about it. If I am, what's my dream thing? Gymnast. Okay. I'm a gymnast, right? And I do gymnastics for entertainment. Okay, that's my business. I'm a gymnast. I do it for that sounded good. Oh, for entertainment. Okay. Now listen to this. Every outfit I buy for my practice, my shows, those are business deductions. If I'm calling people to talk about events I have coming up, my coaches, whoever, my phone bill, business deduction. If I have a home office where I have to be drafting my contracts and all of that, business deduction. If I have to drive to these locations so I can perform or to practice, business deduction. If I have to meet with potential investors, go to lunch, or meet with potential coaches to train me, business deduction. Do you see what I'm saying? So when you're a business owner, every expense you have to incur to make money, it's a business deduction. So as we're coming to the year end, I know a lot of people got into business throughout the year and they're excited, and sometimes they have not really taken the time to understand how they are taxed as a business person. So my fourth tip for you now is use this information I'm giving you. Start asking yourself, what were some of those expenses that I incurred throughout to make my business work that I have not even recorded? Okay, that's important. Now, I want to go to the next thing, because after this, the next thing I want you to understand is what the IRS considers business deduction. Okay, so that's the fifth one. So the fourth one is understand how businesses are taxed. As I explained, businesses make money, businesses spend money before they pay taxes. So which means every expense you have that you have to incur to make money, business deduction. Unlike an employee earns money, pays taxes on this gross before they spend what is left. Okay, so now it's all in your hands, which means if you understand your business deductions, you'll be able to take them. Good. Now we'll go to the fifth one, which is knowing what those deductions are. So the IRS code that talks about this is code 162, okay? And it says your business deductions will have to be any expenses incurred that are ordinary and necessary. That's it. That means the IRS doesn't even limit you. Does that make sense? It has to be ordinary, which means if, like my gymnast profession, if you talk to other gymnasts, we should have similar expenses, like hiring coaches to train us, okay? Having management fees, for example, if we have management, those are ordinary expenses. But now, I may have an expense that is not ordinary to my industry, but it is necessary for me. For example, I might become a really famous gymnast, okay? And I need a bodyguard. Maybe other gymnasts don't need bodyguards, but I do. Why? Because I'm famous, right? Now, this may not be ordinary in the sense of all the other gymnasts, but guess what? It is necessary for me. Does that make sense, guys? So when you understand that your expenses should be ordinary and necessary, you start to realize that there's no limit to what you can write off. Now, there can be some expenses that are ordinary and necessary, but because they are capital in nature, which means you were acquiring assets, you cannot write them off in that period of time. They have to be written off over a period of time. But laying down this, breaking this down so that you realize that the IRS doesn't limit you. And I think that's where a lot of people get into, where they're always scared, like, oh, can I write this off? Well, was it ordinary to your business? And is it necessary as well? Okay. And sometimes even if it wasn't necessary but it's ordinary, I mean, of course you incurred it, so it's probably it's necessary as well, you should be able to write it off. You guys hear me? So that's my fifth one. Okay, just to go over, the first one was for you to review 2023 so you understand every different action you may have taken for your business, so that you can start documenting. The second one was for you to clarify your 2024 goals, which means if you're planning to buy a home, you can start considering if you're going to want to take off things like bonus depreciation to write off cars in 1 year, looking broke on your taxes and yet wanting to qualify for $1 million home. Doesn't work that way. Okay. Third thing is for you to get your books in order. That's very important. And if you do not have a bookkeeper, we have an Excel spreadsheet that you can use if you don't have a lot of transactions. Okay, you can hire us or you can find a bookkeeper that works well for you. That's still fine. The goal is for you to have your books in order. Okay, the fourth one was for you to understand how businesses are taxed, and I've explained that. So when you have that understanding, it takes us to our fifth thing, which is for you to understand now what business expenses are deductible for you. Okay, those are our first five. So we're going to move to the next group of five. Guys, bear with me. I get excited about this because I love to see people saving money, building legacies. So just keep coming with me, okay? So the fifth one I have for you, guys, this is important, especially for those that started business this year. Please make a sale. Hear me out. Make a sale, which means if you started your business throughout this year, and you have been, you paid for registration, you have been buying your supplies, you've been paying for stuff. If you have not made a sale, you're not yet in business. The IRS calls it startup phase. You know the problem with startup phase? You're actually not supposed to write off startup or everything you incurred in your startup phase. You're supposed to amortize it over 15 years. Yes, that is true. Over 15 years. Who likes that? Not me. Okay. And so what does that mean for you? It means if you're a person who started a business this year, we have about 2 weeks. Please make a sale. Okay. I know I was supposed to do this video last week, but I was out of country and my network was so messy, so I couldn't. But please, you still have some time. Make a sale. Call your family, call them, call someone, but it has to be a sale. Don't play hanky-panky. Call your friends, let someone buy from you, because so long as nobody buys from you, it's treated as startup phase. Okay, please. So that's my sixth tip. Please make a sale. This is particularly important for someone who started their business this year. Okay, if you are someone who started vlogging, for example, or blogging, and you haven't earned income, try to sell something. Okay, because all the expenses that you've been incurring to buy your outfits, to buy your cameras, to buy, register your business, so long as you have not sold anything and money has not come in, the IRS says you're not in business. Okay, so please make sure that you make a sale. All right, at least one sale. Thank you, guys. Remember that one. Okay, thank you, Sister Jane. All right, so we're going to the seventh one. I like this one. Seventh tip, host some parties. All right, this is good. This is good. So, why host some party and invite me? Please don't host the party and don't invite me because I like food. I need to be there. But why is this important? This is our festive period, right? And a lot of us, we've heard from social media tax people that you can rent your home to your business for up to 14 days. It's very true. You can do that. Even you're fine. Just write on. When I go to the next five, I'll do a review. Okay. So you can rent your home to your business for up to 14 days. Okay. It's called the Augusta rule and it's IRS code 280E. All right, I'm going to really talk about this, guys, because this is such an amazing tip we don't use. And unlike people that do 30-second stuff and just give you, don't worry, I got you guys. I'm going to feed you on this one. I'm going to take a bit of time. Just bear with me, okay? So this rule, let me give you background information. It's called the Augusta rule. Okay, and what happened was in Augusta, Georgia, back in the days when they used to have their Masters game, there was need for hotel rooms, but a lot of times there was an opportunity for people to be able to rent out their homes to people that came for the games, but the IRS was taxing them on that income. Okay, so now the rule, and because of that, most people did not want to rent. So in order to break that now, the IRS was like, look, if you rent your home to someone, for up to 14 days, which is renting your home to your business up to 14 days, so long as it doesn't go over 14 days, you don't have to report that income at all. And your business gets to write off the deduction. Does that make sense? Which means if I decided to host certain stuff in my home, I can host parties. I can even shoot content if I have like a good following. I talked about my gymnast life. If I'm like a gymnast, I can invite some of my supporters and things like that, host them at my home. You have up to 14 days. Okay. For someone, I've always talked about this strategy, but for someone who has not leveraged this throughout the year, it's not too late. You can leverage it now. Get your family members, which I'm going to talk about, on your board of directors. Hold some board meetings, okay? Do a mastermind. A lot of you have friends that, think big, right? Especially those of you in the business space. I think most of us, when you get into this space, you start to connect with like-minded people. You can hold a mastermind. So what happens is you get to host this event at your home, and you have to rent it out to your business at a fair market rate, which means if you were to rent your house to Airbnb, what would it cost? That's a good example right there. Okay. Or if you were to rent a hotel to do this, what would it cost? Kind of like that fair market value. Okay. Then you get to invoice your business now for this event. So let's say if you were to rent your home to Airbnb, what's the fair market value in your neighborhood? If it's $1,000, okay, let's say between now and December we can do 14 events, but we can do maybe 8. If you hosted 8 parties, guys, that's $8,000 that your business gets to pay you. You don't report the income and your business can write off the deduction. Okay, so that's an amazing strategy. But there are a couple of things I want to remind people. First, this strategy is not available for people that have a home office. So if you already take off the business use of your home, you cannot take advantage of this. This strategy is only available for people whose businesses who either have a corporation or they might have an LLC that is taxed as a partnership, an S corp, or even a C corp. Okay, so this is not a strategy that is available for sole proprietors or single member LLCs unless you have made the election. So please keep that in mind, guys, so we don't screw this up. Okay, but it's a great strategy. I think you should leverage it so long as it's your private home. You can use it. And if you have a business, you feel like you can do some great parties. That's why I said throw some parties, but invite me, because I have to be there and I can share more tips. All right. So that is us at 7. Okay. Now we're going to go to 8. You know what, guys? Ooh, I am so sorry. Before I go to 8, there's one big strategy we have to talk about. And this strategy is for you to review your entity structure. Oh my God. I don't know. I put it here. For some reason, I didn't number it. As I'm going, see, that's why it's good to have notes. What am I going to do? We were on 7, so I'm going to make this 8. I'm going to correct this 9, 10. So I think we're going to have a lot of bonus, okay? Why do we have to review our entity structure? Guys, hear me out. a lot of us start businesses. Sometimes some people just do a business as a sole proprietor from your home, and that's completely okay. You don't actually have to register a business if you're not sure this business is going to go anywhere, or if it's just a seasonal business. You only register a business if you need protection, okay? So a lot of times you have people that might be stuck in a certain entity structure that may not be serving them in the long run. Okay, so this is a good time for you to review your entity structure. There are a couple of things you likely need to do. One, if you don't yet have your business registered and you're beginning to make a lot of money and you deal with people, this is a good time to consider registering, because when you register your business, you're really protecting your personal assets. So when most people go ahead and register things like LLCs, is because they want to protect their personal assets in the in the event that they were sued. I mean, we're not hoping that will happen, but you never know, okay? Second thing you want to do, there are a lot of you guys that have set up LLCs that you have no business setting up and you're not using it. And every year you're paying money to the state for LLC, for entity structures that you're not using. This is a good time for you to dissolve. Do it before December 31st, because if it goes over, Texas is one of those states that will still want to tax you because you went over one day, okay? So if you have an entity you're not using, I know you've told yourself 5 years in a row, look, one day this business is going to come to life. Trust me, it's not worth it. Let it go. Dissolve it and do it right, okay? And the only reason I'm saying you should do it is because there's no point for you paying money to the state for over 5 years, 3 to 5 years, where you're not yet certain what you want to do with that entity. You can always pick it back up. So, but go ahead and dissolve it. So that way you don't go and incur something in the business name that can come down to haunt you, okay? The worst is if you set it up with somebody else. You guys make sure you close it right. That's very important. The next thing you want to do is to consider if you need to do an election. There are a lot of you, your businesses are beginning to make a profit of about 20, 30, 40,000. If you're set up as a single member LLC, this might be a good time for you to become an S Corp, because now you can run payroll on yourself, okay? Because if you've been running payroll on yourself as a single member LLC, that's unacceptable. I know a lot of times payroll companies will come to people and say, oh, set up a payroll account and all of that, but they're not supposed to if you're not set up as an S Corp or a C Corp. You don't run payroll for yourself if you're a single member LLC, a sole proprietor, or a partnership. You don't. You and your partner cannot run payroll on yourselves. You can get something called a guaranteed pay, but it's not payroll. So this is a good time to consider making an election. So think of it, right? So if you're thinking of maybe running payroll on yourself, even for partnerships, if you and your partner feel like you're bringing in a good profit and you want to start paying each other on payroll, right? This is a good time to elect to become an S Corp. So please keep in mind, okay? If you're not set up as an LLC yet and your business is growing, go ahead and get that set up. Incorporate, that's the word. If you have an LLC that you set up and you've not been using it 3 to 5 years down the road, dissolve it. It's okay. Dissolve it. One day that dream will come to life. Third one, if you're ready for an election, this is a good time to consider, okay? And that way, if you want to do it, you can do it with your tax return. You can even make an election when we're submitting your tax return. So instead of waiting till April 15, we would submit your tax return March 15 and then make the S Corp election, okay? That is so crucial. And when you're incorporating your business, I'll just drop this extra tip. Always keep in mind how you set up your business plays 4 major roles. The first one, how you set up your business is going to determine how you're taxed. How you set up your business is going to determine how much protection you have. How you set up your business is going to determine your ability to raise funding. People don't know that. I've had people that were hoping to seek public funding, but they set up as an LLC. The last one, it also determines how easy it will be for you to sell your business. So keep this in mind. That's a good question. You can absolutely rename a business, Sister Jen. You can. And then you can also get a DBA. You can rename and you can get a DBA. You just have to file certain articles with the state. Yes, depending on the state too, because this is a state level thing. Some states make it easy. Some states make it so complicated. Yeah. All right, so now we're going to go, we did that as 8, so we're going to go now to 9. The 9 one, which I really love, guys, please hear me out. Get your family involved in your business. The reason I say so is because during the holidays, we come together with family. And all these different strategies, you can leverage all of them, especially like renting your home to your business when your family is coming over, okay? Now, when I say get your family involved, I understand sometimes we can have our personal differences and you don't want to work with them on a daily, but you can add them on your board of advisors or your board of directors. Okay, so your board of advisors is the same thing like board of directors, but in the LLC world we call it board of advisors. In the corporate world, so if you have a C or S corporation, we call it a board of directors. Okay, when you have your family members added to the board, you just have to review your operating document and make those changes. And then when you meet together, you can sit together and just talk about the future of your business. Tell them, look, these are some of the goals I have. What do you think about this? Now, guess what? When you buy them gifts for Christmas, you're going to be compensating them for their board member services. That's a business deduction. A lot of you people earn money and then pay, and you take the money that you're going to be paying taxes on to buy them gifts. Okay, so how do I do a board of that? Do I just sign a pay? Oh, that's a good one. So you should have like your minutes that you can start creating that for your documents. Any operational documents that you have for the company, you can just go ahead and update that. Okay, so you can just update your articles and say, going forward, we're going to be adding this number of board members to our company, board of directors or board of advisors. Yes. And oh, by the way, on the planner, you guys, we do have a sample something how you can write your, I think I have it, how you can save your minutes and then you can put it on there. I think I need to find it. I'll just show you. So you can do a similar thing. You can hold a meeting with them, do a minutes thing, and then kind of like this. If you can see it, it says informal meeting, right? This is an informal meeting minute, and you just indicate what it is that you've put, you know, who the new people that have joined the board. It's as easy as that. And this is not a document that you file with the state. The state normally would ask for you to provide the officers, but generally not your board of directors, because you get to change your board of directors over time. Yeah. So if you just do that, Sister Jane, and you keep that record, you know, that's all you have to do. Yes. Good. That's a really good question too. Okay, so that's a good way. You guys really consider adding your family members, you know, those siblings, annoying ones. You may not want to work with them, but it doesn't hurt to have them on the board. Get them involved, and when you have them come over, you can actually use that board meeting as well as one of those 14 days rule rental, where you rent now your home to your business, right? Even though you have them coming, but you guys are holding a board meeting. The food now that you're eating, that becomes a business deduction because you're holding a business meeting. Just make sure you document your minutes, okay? If you don't have this, please grab this. This planner is so good. It has the tools on how to record the minutes. But let's keep going, okay? Oh my God, I love this. Guys, bear with me if I get too excited. Please ask me questions and tell me to slow down. I want to be mindful of the time because time just flies. Okay. So I'm going to go now to the 10th one. And the 10th one is for you to review what we call your reimbursable expenses. So now this will not apply to everybody, but there are a couple of people here that have made the S Corp election. Some people are in partnerships or C Corps. So any multi-member LLC and things like that, right? So when you run a business, sometimes there are expenses that you pay out of pocket that are not necessarily being paid from the company account. So those are called reimbursable expenses, and sometimes we call them your mixed expenses, okay? So what happens now with this is, if you have incurred those kind of expenses, like your mileage, for example, if you have an S Corp, if you've made the election, your S Corp right now can reimburse you for using your mileage to run business errands. If you're using your phone bill and you're paying out of pocket, but part of your bill, part of your use goes towards business, then your business can reimburse you for that phone bill. Does that make sense? Something that we have that we've given away, I'm sure most of you that have come to our segment is also in the planner, is what we call an accountable plan. The IRS doesn't require it, but I encourage business owners, go ahead. We have a template. Just enter it on the template, create a reimbursable plan for you. All you're doing is saying the different expenses that you're currently paying out of pocket that you're incurring for the business as well, right? I gave an example like your car. If you might have your personal car, but you're driving it for the business as well, when you track the mileage, that's reimbursement. Think about it. That's like 65, 66, 67 cents per mile. If you drive 10,000 miles for the business, that's like 6,700 that the business reimburses you for. You don't even, and you're not reporting that income. the business gets to report the expense. Okay, so just take note of that. If you have the planner, if you go to the accountable page, you can list those different expenses. Even if you don't have the planner, just take this time here and start looking back at your records. What are some of those expenses that I incurred, that I paid out of pocket, that were supposed to be paid for by the business? Okay, this is a good time. That's why I say this season is the perfect time to do things like that. Okay, let's go now. For my 11th tip is for you to defer income and accelerate expenses. Now, this doesn't apply to everybody, okay? And keep in mind, all these strategies we talk about, everyone is in a different place in their business. This is for someone who has made a lot of money and they want to reduce their tax liability. Okay, so if you're someone who, like if you have a home healthcare business, for example, and you invoice your clients, you have individual clients, you can decide to invoice them January 1st instead of having them pay you in December. That way you're deferring your income. It's not that you're not going to invoice them to pay, you're just deferring it to come in January. Now, when it comes to your expenses, you can actually prepay some of your expenses for next year. So if, let's say this year, in my gymnast profession, let's stick with that. I like that profession, my gymnast profession. In my gymnast profession, let's say I made I had like 3 major events. Okay, this is not a common recurring thing in my business, but I had 3 major events that paid me so good. Now they've increased my profit. So I may not have this amount of money next year because those events hold once in a blue moon, but towards the end of the year, I have this extra money. What I would do now is I would take the time and prepay my expenses, like rent, for example, right? Auto expenses. If you can even prepay like your premiums or whatever, like any expense that you can prepay, the IRS allows you to prepay up to 12 months and you get to write it off in this year. Okay, so that's a good way for someone who's trying to save on taxes to defer income and accelerate their expenses, and is completely acceptable by the IRS. Okay, so the next one, we're going to the 12th one. The 12th one now is for people that paid independent contractors. Please make sure that they provide the W-9 that they're supposed to give you before you give them their last payment. The reason I say so is because when January comes, the IRS requires you to issue a W-9 to anybody that you paid over $600 to. Okay, so if you had someone that did work for you, a lot of people get smart. They don't give you the W-9, and then when tax season, when that time comes, you cannot issue them the W-9. They cannot issue them the 1099 because they are gone. That's a requirement that the IRS has. You're supposed to file and report income that you paid to an individual that made over $600 from you, and that's for the year. It's not for the month, for the year. A lot of us business owners, we do deal with independent contractors. This is the best time to get them to complete those W-9s. Don't wait. Trust me, we've had situations where people did not give it, even though we can file without them giving you their social security, but you're better off getting that W-9 and getting it filled up. Okay, all right, so that was 12. Let's go on now to 13. I think you guys will really like this. This one is great even for people that have jobs and are not business owners. Number 13, please maximize your retirement benefits. Okay, your 401k. Throughout, it's so interesting. Since November, most of the people I've met with are people that work full time, and they're looking for ways to they have probably crossed a certain income threshold, and they're looking for ways to reduce their tax liability. If you are here from the start, I explained how employees are taxed. You earn money, you pay taxes, and you spend what is left. Okay, so when you go into a new tax bracket, if they are still withholding only the same tax they were withholding before, you stand a high chance of owing a huge tax bill. So if you're able to increase your 401k contributions, that's considered pre-tax dollars, which means that money will not be added, will not be factored in your taxes. Does that make sense? So if, let's say, I was making $70,000, okay, and my next tax bracket is 80 grand, and they gave me a pay and bumped me up to $85,000. If I'm able to contribute up to that 22,500, maybe that extra 15,000, I can put it towards my 401k. Guys, why I like 401k is because you can always borrow out of it. You understand? You can always take a loan. It's your money and pay it back. So, but at least it prevents you from having to pay that higher tax. It's a good way for you to, push the taxes to later. Another thing you can do for those that are entrepreneurs, if you do not have a solo 401k, this is a good time to consider setting it up. I'm not going to go into detail for this one just because it's a bit complex and there's so much to cover. But definitely, if you can max out your 401k, please do. Okay. Now, my number 14, favorite of all the time, pay your kids. If your kids were working in your business, you have got to pay them. For those that have not been leveraging this tax strategy, please hear me out. I'm holding 2 ears. Get your kids involved in your business. Okay. One of the things we've done in this planner, we've given you sample job ideas. We've even created a family contract that you can use to hire your kids in your business. Now, for those who have brought in their kids, we've gone over this several times. Sister Jane, you're my witness. We've talked about this. I've done posts. But just a reminder, if your kids are 18 or less, they can work in your business. And if you still claim them on your taxes, you don't have to give them a 1099. You don't have to give them a W-2. And they don't have to report the income themselves, so long as it is less than the standard deduction, which for this year is 13,850. Guys, that's good money, which means you can take that money, you can create an IRA account for them. I think it's the custodian IRA account. You can put it towards their different stuff that you want to pay for. But it's such a great business deduction. Think of someone who made a profit of about $30,000. Okay, somebody will tell the person, go and become an S corp. If that person has 3 kids that work in their business, all that money is gone. They don't need to become an S corp. That's money that goes to their kids, and the kids don't have to report the income. You see what I'm saying? It's such a great strategy. So for anyone who hired their kids throughout, this is a good time to look at your numbers. Did you pay them their fair share? It's kind of reconcile that. If you've never done it before, I would love for you to seriously consider this. I even have a whole course on this, on Teachable. Take your time to learn it. Leverage this tax code. It's good money for your family, and it's a good way for you to save on taxes. Teach your kids entrepreneurial skills. Get them involved in your business, and then use the money to pay for other things, put it towards other things. Now, here's a tweak I'm going to add to this strategy, because one of the questions a lot of people would ask me is, can I hire my nieces? Can I hire my nephews? Okay. And I'm so happy we're doing this today, because this is the new tweak to this, and I'm hoping that it can help someone who has a similar question. I've had people ask me, some of my clients ask for their grandkids. So this is how it works, you guys. Okay. If you want to hire your nieces and nephews, you can do exactly the same thing. But you're going to tell them, dear Jonathan, I don't know where that name came from, Susie, okay? Auntie's going to hire you in the business, uncle is going to hire you, but I'm going to bring on your parents to manage you. And their parents now will have to set up, they don't have to register it, hear me out. They just have to set up a management company where the payment for their kids will be going into that account, and then they will be paying the kids. So it's in and it's out. They don't have to pay taxes on that money. Does that make sense? I'm going to take this one really slow. Please ask me questions. This is usually a good situation where if you support your nieces or your nephews and you want to give them an opportunity to earn the money and you own a business, this is a great strategy, okay? So you just have the parents set up the family. You can send them the content we have in the planner, send it to them, let them set up their own family management company, and all you're going to do is pay that family management company, right? So let's say it's 2 kids. You pay 2 of them $12,000 each. That's $24,000 that goes into that into that account. Then the $24,000 goes out back to them. So the parents do not incur any tax liability, and you do not also. And the kids do not have to report the income. I hope this is helpful. Okay. So if you're someone who wants to leverage this tax for family members, this is a good strategy to use. All right. So I'm going to move now. Oh my God, we're going down already. Okay, we're already on 14 and I have so many. Now I'm going to go to 15 and then I'm going to give you guys some bonus ones. Okay, so my 15th strategy, it's really about the HSA account. There are so many people that do not use the HSA account. Hear me, you guys. That's the health savings account. The HSA account is like, it's like a diamond. it gives you so much flexibility. This is not FSA. FSA is what you call your flexible savings account. No, that's the use it or lose it. It's good so long as you're going to use it. But the HSA, it's for people that have like a high deductible plan, right? And once you enroll in it, listen to this. If you're a single person, you can contribute up to 3,850. If you're a family, you can contribute up to 7,750. Guys, this money is pre-tax, which means you don't pay tax on the money, and the money gets to grow tax free. If you use it for medical expenses, all of that, you don't pay a dime on taxes. But even down the road, if you had an emergency and had to use it, at least it's something that you had even saved and it grew tax free for you. And then of course, if you use it for something personal, you pay taxes. But it's such a great tool. And for people that have jobs, people that are trying to reduce their tax bill, this is a good one for you to leverage. Okay. Oh my goodness, we went real quick. So remember, HSA, not FSA. Now I'm going to talk about my bonus one, and I'm going to be back to talk about it. The two bonus ones. First one, make charitable donations if you itemize. Okay, if you itemize, good time to make charitable donations. Now my big bonus one, if you guys have heard, I'm sure it's come to your attention that there's something coming up known as the beneficial ownership information. Okay, this is a huge compliance thing that is coming up, where FinCEN is going to require people to report two things: people that actually own businesses, at least 25% or more, and then the people that filed the application for the businesses. This is kind of, to catch a lot of the fraud that has happened. I plan to do an extremely a separate live for this one, because it's huge information. It's going to be a big compliance thing, and those if you're a small business owner and you do not file this paperwork, the IRS is going to penalize you. Penalties is up to $500 a day. Now, it does not kick in until January 1st. So don't let anybody make you pay for something. They have not put out the forms yet. It's not yet effective. It starts January 1st. So save the, be checking my status, because I'm going to do a separate live video for this. It's so important for every business person to be aware. So this is a good time now. If you don't know, let's say you guys have had a lot of changes in your company. What I'm encouraging you to do now as a tax strategy, it's a tax strategy, business strategy, but keep you out of trouble. It's really to go back and start looking at who was the one who registered the business, of all the changes, who are the people that have ownership, how much ownership, who is making the decisions. Okay, I'm going to have an extra session for this, but I think we've covered this. Yes, we went over our 15 tips, and then we had two bonus ones, the charitable one and then the BOI, beneficial ownership information, which I will be spending a lot more time to educate you guys on, because information is so powerful and I don't want anybody to be left behind. Any more questions, you guys? Did I miss any questions? Is this helpful for someone who is watching this? I'm gonna just remind you, please remember, your expenses just have to be ordinary and necessary. So claim every expense that you had to incur to make money. Don't leave money on the table, okay? It's very important. I applaud everybody who is doing business right now. I think entrepreneurship is the way to go. If it's not for you, it's still okay, because I have tips for you. But if you're not in entrepreneurship, support your friends who are, because it's not an easy ride. I hope I can be a resource to all of you guys who are watching this. If you don't yet have a CPA who's got your back, in fact, that's the third bonus one. Get you a good CPA. We've got you covered. Visit us visit us at www.arcnps.com to book some time. I think having a solid CPA or tax person on your side is very crucial as a business person. You cannot keep going to the person that used to enter information into a system. You need people that can apply strategies that apply with your goals, your short-term and your long-term goals, to make sure that you're really leveraging the tax code for you. Okay, thank you guys so much. Thanks to everyone who hung out. If you're watching this later, give a shout out. If you have a question, feel free to send it. I'll be more than happy to respond to it. And I do intend to do another live on the BOI. Okay, everyone be safe. Thank you so much. Oh, Cynthia asked a good question. Can I register a business in the US while living out of the US? Absolutely, Cynthia. Yes, those are some of the things I'll be teaching about next year. People who live outside of the US but want to register businesses in the US, or non-profits, because that's something our firm does. We will be doing that. Thank you so much, Sister Jane. So, Cynthia, be on the lookout for that. I will be scheduling that live as well to come and talk about this. So, if you have some friends that want to register businesses in the US, tell them I will be going over that information. It's going to be a good one. Both businesses and non-profits, I'll walk them through how to do it and to also make sure that they don't get scammed, because there are a lot of scammers out there. Yes. Thank you guys so much. Did I miss anyone? Okay, yes, I already responded to that. You guys are awesome. Thanks for hanging out with me. Have an amazing Sunday, and we'll be in touch. I'll be back. I'm hoping to do a lot more lives. You guys know my heart already. I want to empower our community with as much knowledge as I can so that we can all win, right? Because if you guys know better, you do better, we all win. And when you make money, you're going to come and look for me to be your CPA. So I want all of us to be winning. Thank you guys. Thank you so much, Siri. I know it was last minute. Thank you for hopping on. Thank you, Sister Jane. Thank you, Clifford, for being here. Cynthia, thank you all so much. Thank you, Yvonne. I really appreciate you guys. Have an amazing Sunday, you guys. Bye. It's been awesome. Thank you guys so much.